Webinar has started.
Yeah, thank you, Kashmira. Good morning, Suprabhat. Welcome one and all to this fortnightly market outlook webinar. We have a lot to discuss today. It is an exciting week. A lot has happened. So let's discuss that. I'm joined by my two colleagues, Nagaraj and Siddharth, for sharing their insights from technical and derivative perspective as well. So let's welcome them also. Good morning, Nagaraj.
Good morning, Deshpande. Good morning, everyone. Welcome to our fortnightly market outlook webinar.
Right. How are you doing, Siddharth?
Very good. Good morning, everyone. Welcome to the webinar.
Okay. So without further ado, let's just jump into the content. I'll share my screen. Just give me a minute.
Your screen is visible, Deshpande.
The full screen is visible, Nagaraj? Trump versus.
Yes, it is visible.
Okay. All right. Thank you. So let's start. So there are three important things which has happened. First is the summit between Trump and Putin. So they met in Alaska. No agreement has been reached at the end to end the war in Ukraine, but at the same time, it is not negative. They have now agreed that President Putin, Russia will have a meeting with Ukraine and possibly other European leaders. They will set up direct meetings with each other and they will take steps towards the ceasefire. Trump has also said that he might visit Moscow for a follow-up summit after the agreements with the European leader is done, and there he may announce end to the war along with Ukraine, Russia, and possibly ceasefire brokered by President Trump. So it is not immediate positive, but it is not negative. After the meeting, he has said that it will take 2-3 weeks, and he will review the duties which have been put on possible buyers of Russian crude oil. So he may not have to look at them immediately, but if there is progress between Russia and Ukraine, he will review the duties put on Russian oil. So that is marginally positive. And overall, this is a step towards creating a long-term lasting ceasefire in this war, which has been raging for the last couple of years. Second important event which we need to address is the Prime Minister's speech from on the Independence Day. What he has referred to as that government will like to roll out the next generation GST reforms by Diwali. And in that particularly, he has mentioned that they will go after and try to reduce the GST rate, particularly on the daily use items. And they may substantially reduce the tax burden on citizens to boost the consumption. So, as we know, the GDP growth is high, but it is not up to our potential. Government can have two levers. First is from the investment side. So they have reduced the income tax earlier. They have reduced the interest rate. The RBI has reduced the interest rate. And now the consumption side of the GDP is being addressed with the help of simplification of GST rates. They are also talking about simplification of compliance for medium and small enterprises, startups, and entrepreneurs. They want to reduce the paperwork and into the overall environment for businesses. And basically, the inverted duty structure and rate rationalization in GST should help for businesses also. Now, there are talks, and these are just right now not confirmed announcements from the government, but this is what has been discussed, that there will be only two GST rates, 5% and 18%, and there will be one particular rate for sin goods at 40%, like cigarette and others. But for majority of the item, there is a proposal that government may keep only two rates, 5% and 18%. Now, if that were to be true, then majority of the middle class consumption items like white goods, that is air conditioner, large TV, refrigerator, washing machine, all this may come down from 28% to 18%. And other items like chocolates and cars and cement and all also may have reduction in GST. So if that were to be true, if government goes ahead with this reform, then most of the items will come down to 18%. That will become a little cheaper and it will directly benefit the consumers. If these reforms are there by Diwali, there is a possibility that these things may slow down a little bit as some of the consumers delay their purchases if that taxes were to be cut. So the government may announce them gradually. They may not wait till Diwali, but before the Diwali, GST council meetings will be held, and in that they may announce the reforms. Another thing is that the manufacturers will also try to pass on this benefit in anticipation of reforms. So those things, schemes are likely to come, and that will help the consumption in the economy. Another important event which happened on Friday afternoon, but since GST or the independence speech and the Putin Trump meeting has happened after that, it has taken a little bit of a backseat, but it is also a very significant development as the S&P has moved India in one notch higher within the investment grade category, one notch higher after 18 years. So this is a very important signal and it enhances the India's economic stability. It is boosting investor confidence and attracting foreign capital. This will help our equity markets and bonds. This will strengthen the rupee and reduce the bond yields in the long run, and it will help India achieving the macroeconomic stability. So ratings upgrade, GST reforms, and some headway in talks between Russia's President Putin and Donald Trump has happened. So these are three individually important events, and three are on the positive sides. So cumulative effect of all these three will be reflected in the market on Monday morning. Now I'll take a couple of minutes to share what has happened in the markets over the last fortnight and last 1 month. So as you can see on the screen, Indian markets over the last 1 month has majorly underperformed the global markets. The markets like important markets like S&P 500, Nasdaq and Dow are about 2 to 5% higher. China and Japan are higher by 5 to 10%. In the same time, in the same 1 month, Indian markets, the Nifty and Sensex are down about 2%. Mid cap is down by 5%, while Nifty small cap is down by 8%. So compared to Nikki's 9% positive movement or rise, Indian small caps are down by 8% and huge divergence has been seen. Similarly, in the last fortnight, we can see that the most of the global markets are higher between 3 to 10%, 3 to 7%, while Indian markets are more or less flat. So we were falling. Last fortnight, we are trying to form some sort of a base. Despite the huge selling, our markets have been able to absorb the selling. We are trying to build some kind of a base. Now we have three important positive developments, marginal positive developments. And because of that, there could be a rise in the market next week. What are the important levels where we will reach? My colleagues will share in the technical and derivative presentation, and then I'll come back and try to conclude. Within these sectors, within the Indian markets, also I would like to share that the auto, metal, and PSUs are doing well, while FMCG, real estate, and capital goods have been underperforming on the fortnightly basis. Similarly, on the month-to-month basis, real estate is down about 10%. IT, capital goods, and oil and gas have been underperforming. Auto have been stable, and consumer durable is one of the least underperformers. Now, because of what has happened in the last couple of days, we expect that the FMCG will have a boost. So we can expect short covering rally in FMCG sector, consumer durables, and automobiles in the next week. So all these three are likely to do really well over the next fortnight, starting with Monday, where we may see short covering in FMCG and consumer durable auto sector immediately on Monday. So that's what is things are shaping up to be. Now, let me invite Nagaraj to share his views from technical perspective. Nagaraj, over to you.
Thank you, Devarsh. Um, I'll share my PPT. Is my presentation visible?
Make it in full mode.
Now? Yes.
Next one.
Okay.
Go back.
Hello.
Go ahead.
Go ahead. It's
Okay, right.
the last one, the screen one.
Okay. Yes, friends, good morning. And as Devarsh mentioned, we have a lot of things has happened in the week, during this week and this weekend, and we'll discuss how the markets have shaped up, and we'll discuss about the technical aspects of the market, how the market is behaved last week, and how they are shaped up to the events which has been going on. Friends, what we can observe on the daily chart is continuous lower tops and bottoms formations in the market over the last 2-3 weeks. This lower top and bottoms on the technically front, we can say this is the bearish indication, negative indication. And after the formation of important bottom around somewhere around 24,300, 340 levels, the market has bounced back. Last two sessions have witnessed some kind of a consolidation. Probably market was waiting the geopolitical event and other sides, and definitely this has completed, and I'm expecting some big bang movement in the market on the upper side. So on that front, that consolidation is expected to break above. In case Nifty breaks above the crucial hurdle of around 24,750, 24,800 levels, then we could have some change, a drastical change in the sentiment of the last 1 month. We can see what Nifty was doing in a lower tops and bottoms. The whole trend, the sentiment is going to change. Only thing is that we have to wait. Nifty has to sustain above the 24,800 levels. Still, the trend remains bearish as of Thursday, and we have to see how things pan out. On the weekly front, what we can observe is consistent 6 weeks of decline with long lower tops. What you can observe on the last 3-4 weeks, weekly candle is long upper shadow. These upper shadows are indicating the sell and rise opportunity. Whenever we have seen market moving, showing pullback rallies, those rallies have met with the sharp decline, and market has declined week on week basis. After 6 weeks of decline, we have seen some ray of hopes for the bulls, as we have seen some sizable upside bounce by around 1% from the lower levels, from the lows of around 24,350 odd levels on the weekly chart. That indicates that the market has taken the support, and the downward streak of the last 6 months seems to have halted. Either market may move sideways. On the technical front, we can say market may move sideways or could even the break above the hurdle. Currently, 10-week EMA is showing a strong resistance. So far, last 2-3 weeks, around 24,800 levels. I'm expecting if Nifty shows a sustainable upside breakout by next week's around 24,800 levels, we could even move towards 25,300 level, which is going to be the next set of hurdle as per the smaller and larger time frame charts. Friends, this is the monthly chart. Monthly time frame remains intact. Monthly long-term uptrend in market remains intact. What we can observe after 4 months of continuous upside momentum. In the last month, we have seen some sizable downward correction from 26,100 levels to 24,000, 24,000, 24,300. After that, market showed some recovery from the lower levels this week. And whenever the longer term chart shows into a consolidation, shows into a downward correction, what we can observe a temporary downward correction, and eventually market turns up from the lower levels as per the intact of the long term uptrend. So here is exactly what is happening. Nifty has bounced back from the lows of around 24,300 level, still showing some consolidation, and the month is not over. So till the end of the month, we could see some clarity in the long term chart. So I'm expecting, as per the smaller term charts indications, inherent strength, what we can observe is likely to have, market is likely to bounce back from the lower levels. We could see some sizable up moves from the lows. So this is the bank nifty, friends. What we can observe is a decisive downside breakout of the consolidation pattern, a wedge type of pattern. After that, bank nifty has declined for 2 months, last 6-7 sessions, and last week we have seen some minor bounce back from the support of around 10-week EMA. This is also some important crucial juncture. What the chart pattern is indicating, the halting of the last 6 weeks decline. There is a possibility of some consolidation and higher chances of moving up from the lower levels as per the chart on the bank nifty front. So friends, this is India VIX volatility index, which has been over the last couple of months. What we can observe is highlighted the area of the spikes. Whenever the India VIX has shows spike from the lower levels of around 10, 9.5, 10, 11, 12, whenever it has spiked, immediately it has cooled down and continuously declined. This is a daily chart of this India VIX. What does this mean? Whenever we have seen these highlighted areas, we have seen around 6-7 highlighted areas where we have seen some strong spike in the volatility index and immediately come back downturn of the India VIX back to the lower levels. It has spiked from the 10 to 12 to around 22, 24, 25, and immediately it has come down to the 10 and 9. What does this mean? The spike in the volatility index is a fear, and that is a knee-jerk action. Whenever we have seen a lower top formation, lower bottom formation, whenever we have seen a sharp decline, that was indicated by the higher degree in the volatility index and currently placed at the higher levels. There may be a possible we could see some sharp up move in the volatility index and immediate come down. That means we could see some volatility ahead, and eventually there is a scope for the downside further from the higher levels in volatility index. We could see some sustainable upside momentum after the volatility. So friends, mid-cap 100 weekly chart, it's showing the similar kind of a pattern. After 3 days, 3 weeks of consistent decline, the mid-cap has bounced back with a smaller quantity, even though bounce back is not that significant from the lows, but still showing something else is cooking in the market. The downtrend of the last 3 weeks in the mid-cap stocks is likely to end. We could see bottom formations, important turnaround in some of the mid-cap stocks, and that could lead to some good amount of upside momentum. And this is a small cap stocks, a small cap chart of a daily small cap 100 chart. What we can observe, a consolidation moment placed at the strong resistance of around 200 EMA, showing some consolidation, still not showing any strength of up move, but the overall chart pattern of the small cap is placed above the important reversal area. So if Nifty shows some prominent bounce back, then certainly these mid cap and small cap are likely to follow the benchmark. So the friends, market is waiting the positive news from GST. What we have seen, Prime Minister Narendra Modi on his Independent Day speak that GST reforms will be taken by Diwali, before Diwali. And also we have seen some event from the geopolitical side, as Devarsh mentioned, Trump and Putin meet and the outcome of the meet. So these are the things that market was waiting actually for the geopolitical meet that market was meeting, showing some sign of consolidation. And I think this is the positive indication, as Devarsh mentioned, we could see some gap up opening on the Monday. So we could probably see the retest of the immediate hurdle of around 24,800 levels. So on the technical front, the Nifty sustaining above 24,800 could have a positive impact on the technically. That could lead to the further up move for the Nifty towards the next resistance of around 25,300 levels in the near term. Bank Nifty also looking same thing, bounce back from the lower side. if Bank Nifty sustains above 56,400 level, which is the immediate resistance, we could see a next upside momentum towards the next higher levels of around 57,200 for the Bank Nifty. The overall chart pattern of broader markets, Nifty, mid cap 100, small cap 100, still choppy, but further upside from here onwards could confirm the bottom reversal. That could open the opportunity to accumulate the go longs in selective mid cap and small cap stocks, where we could have some limelight is going to come. Sectorally, as Devarsh mentioned, automobile, banking, and consumer durable, or even FMCG are likely to see some upside momentum back of this positive events on the Monday or this next week. And the other sectors like metal, realty, which were showing some consolidation, are likely to bounce back from the lower levels. So, friends, that's all from my side. Now, I would like to invite my colleague Siddharth Deshpande to discuss about the market from a derivative front. Welcome to Siddharth. Over to you.
Yeah. Thank you, Nagaraj.
Yeah. Your PPT is visible. You can go ahead.
Yeah.
Make it a full screen mode.
Yeah. Yeah. Welcome everyone for a prime daily derivative outlook webinar. So I will be mainly focusing on Nifty, Bank Nifty, and its open interest, PCR, and other parameters which comes under the derivative segment. Let's start. So this is a Nifty chart of last 5 sessions. If you can see there was the initial volatility in the Nifty, and after that I think it has moved almost flat. So if you check on weekly basis, the Nifty has risen almost 1.10% in the last week, but open interest has marginally fell 1.5%, which is suggesting that there is a short covering in the market. And this is basically a open interest chart, and if you see that open interest has marginally fell to 1.5%. Then next is in IV is almost flat around 12 level, which has not moved sideways. In the initial days it has come down, but after that it has sustained to that 11.8 to 12 level. Next is now PCR. PCR, it basically was in the oversold territory around 0.7 point to 0.750, and now it has come towards that 0.97 to 1.101. Means on Friday it has closed around 1.01%, which suggests that neither overbought or oversold level for the PCR. Then we'll move towards the Bank Nifty. This is the Bank Nifty chart. Like previously discussed, like the Nifty also, Bank Nifty saw initial volatility, and after that it has moved sideways for the entire week. And on a weekly basis, Bank Nifty has risen almost 0.61% in the last week, where open interest has increased by 0.50, which suggests a long build up in the Bank Nifty. This is the open interest chart. It has actually continuously risen. IV is also sustained around 12 to 12.2 level in the last week, where PCR at towards the closing it was around 0.76 level. For a Bank Nifty, the PCR also level is around 0.70. So we may see if market open on positive on Monday, then we can see a major short covering in the Bank Nifty, which further will boost open interest and with the price rise in the Bank Nifty. Then we can see a long build up in the Bank Nifty. This is the basis chart. Basis has also come down on Friday, but I think on Monday it will again start rise. Now we'll move toward the open interest chart, where we can see around 24,900 to 25,000. There is a major call writing, so which suggests a resistance around that level. And Nifty was closed around 24,687 on Friday, on Thursday. And on towards the put writing, it's around 24,500 to 24,600. So in coming session, if Nifty holds about 24,500, then we can expect a Nifty heading towards 25,000, which is a major hurdle. So if we see Nifty heading crossing about 25,000, then we can see a further short covering in the Nifty, and then Nifty may head towards 25,300, which is the next resistance level. Around 24,400, there is a gap value, and around 24,000 to 24,500. So on the lower side, we can expect a support on that level. This is next is in Bank Nifty. Bank Nifty has a resistance around 56,050, followed by 56,500, where the major call rating has happened. On Thursday, Bank Nifty has closed around 55,500 level. And on the support on the downside, 55,000 has a major put level, shorting level. So on the downside, one can expect 55,000 as a good support and 56,000 as a max resistance level. So if Bank Nifty is able to cross up 56,000, then we can expect the Bank Nifty is heading towards 56,500 and further towards the 57,000 if the news is positive on the GST front. Yeah, this is next sector-wise open interest chart where we can see in everybody had told that automobile we are seeing a long build-up. Then next is in new age stocks where we see a long build-up. Pharma also we have seen a long build-up, and technology also we have seen a long build-up. Like chemicals and telecom, which we have seen a build-up of short position in last week. This is a heat map of last 1 week where this Alkem Apollo Hospital Eternal IX has shown a greater fresh long position, which is like 10%, 8.75%, 4.8%. Long one was seen around in NBCC, Coforge, UPL, and Tata Chemical, whereas short build-up was seen in PGL, Amber, Kalyan Jewellers, Astral, and short covering was observed in Paytm, MFL, Fortis, and Zydus Life. Next slide. This is a FI to long to short ratio. If you can see that FI's long to short is extremely oversold at extremely oversold level around 0.09 level. So on Monday, due to this also we can if Nifty able to sustain about 200 points or something like that, we will be able to see the short covering in FI's long to short ratio, and we can expect that this ratio will move higher towards 0.3 0.25 level in coming sessions. So we have to watch this ratio on Monday. If it is able to sustain across above that 0.09, we may expect a short covering in FIs. This is yeah, basically net position or index future contracts where we can see that uh, clients are continuously having long positions where FIs increased their long position in the last 1 week. So FIs are still bearish on the market, but I think Monday or Tuesday market this scenario might change, and we can expect a market movement on positive side. So overall, basically short covering was observed in Nifty future in weekly basis in the last week, where higher open interest is around 25,000 level followed by 24,900, suggesting resistance around that level. So if Nifty is able to cross about 24,900 level and not 25,000 level, then Nifty is heading towards 25,300 level. On the downside, 24,500 is a good support level. Below that, we can expect a 24,000 level. The chances of happening this is on the lower side. Same case with the Bank Nifty. Last week, we have seen a long build up in the Bank Nifty future, where we are expecting that Bank Nifty is heading towards 56,500 level. And if we're able to cross that 56,500 level, the next resistance around 57,000. And on the lower side, Bank Nifty is placed, good support is placed around 55,500 level, followed by 55,000 level. Yeah, over to you, Devash. Devash bhai.
Okay, thank you, Siddharth. Thank you, Nagaraj. Is my screen visible? Can you see the ratings upgrade screen?
Yes, yes.
Yes,
Okay.
it is visible.
Okay, so short covering is what we are expecting on Monday. So first, as we have showed, 24,600 is the level at which we have closed. There are three important events, and let me just again discuss them. So based on what has happened, we are expecting that if one of them, which is already come out, which is the ratings upgrade, market has the potential to go up to 24,800 at the opening. Now, what has been discussed on the Prime Minister's independent speech, and if actually the over the next few days or by Monday morning, we are confirming that the GST slabs will come down from say 28% to 18%. This has potential to even add another 200 points to Nifty. So if that is confirmed by Monday morning, it can open around 24,800 to 25,000 level. One more positive which can come is that the summit between Trump and Putin is over, and there are indications that he has not talked about increasing the punitive sanctions on India. In fact, there are some chances that he may announce that the extra 20%, 25% duties, which is imposed on countries like India for buying Russian oil, that may get delayed. And if he blinks there, the 50% duty which he talked about may get reduced to 25%. If that kind of announcement comes before Monday or anywhere between now to the next few sessions, it has potential to add another 200, 300 point to Nifty. So if all these three are confirmed before Monday morning, we can expect a gap up. Gap up could be as high as 200 points to higher, depending upon what all get confirmed by Monday morning. But anyway, sizable short positions are there in the market. So we are expecting some kind of positivity depending upon all these important news flows, which will get crystallized over the next few hours. What are the sectors to keep an eye on? Auto, consumer durables, and FMCG, as I mentioned, and we'll also focus here and try to give you some ideas and picks in these sectors. Longer term, we like auto, consumer durables, FMCG, cement and other building material sector, and banks. Bank Nifty is looking to participate in this rally. So these are the important areas where we will look for opportunities over the next few sessions. We continue to come out with investment ideas, pick of the week, and also MTF ideas. If all these gets confirmed, we will be aggressive and we'll come out with more high conviction MTF ideas for you on in next couple of sessions by Monday afternoon or Tuesday, and we'll help you to position yourself and take benefit of the upcoming move in the market. 24,500 will remain the stop loss for us. Any long position on the trading side, on leverage, on MTF future and options, keep a 24,500 as a stop loss for your short-term trading positions. So that's what we wanted to share. A lot of excitement is expected in the market over the next 1 week, 15 days, next fortnight. Depending upon what all these things confirm, we can have a important positive movement in the market going ahead. If none of this is confirmed and if things fizzle out, obviously we'll have to keep 24,500 as a stop loss. So that's what we wanted to cover. Now, if anybody wants to ask any questions, we have a couple of minutes where we can address those questions. You can ask your question in the Q&A or put it in the chat and we'll try to answer those questions. If you have any questions on YouTube also, you can ask there and we'll try to answer those questions there. So before we just wait for a couple of minutes for the question queue to get assembled. Siddharth, you mentioned in your presentation that some of the sectors like auto are showing some signs of positive build-up. Can you just repeat those sectors names once again?
Yeah, so automobile, then cement, new age technology, pharma, and technology. These four sectors have built up a long position on last week. So I think this will outperform the market in coming weeks.
Okay. One question I can see is what is the long-term view in pharma and IT stocks after the correction? So overall, pharmaceutical has one more a problem from the Trump side, which is pending, that he may impose another duties, especially on pharmaceutical large innovators in order to reduce the prices in the American market. So that one level of uncertainty is still remaining in the pharmaceutical sector. IT is not only about the current geopolitical situation. There are, as such, it is in the services sector, and the trade war has nothing to do with the services. They are mainly on the goods, but it is indirectly impacting because of the immigration policies of the government, H1B visa of US administration. They are creating some hurdles there. There are some uncertainties. So that is impacting from the political side. On the technology innovation side also, we are seeing a lot of innovation where the number of IT service professionals required to implement a project is coming down drastically. And that's why the service contract sizes are coming down. And that makes us a little worried about the IT sector. Though some of the technology stocks have come down to very attractive level and they offer a short-term value buying opportunities. But as a sector, we remain skeptical and we are not recommending any positional investment ideas or the long-term investment ideas in the IT sector as of now. So we have restrictions on commenting about certain IPOs where we have investment banking relations and we have banking relations. Once the company is listed and after 3 months, once they have the quarterly results out, we would like to cover some of the important IPOs and large companies. In the past, our institutional research team have covered companies in the sector. So yeah, we do keep covering the companies mostly after the first quarterly result season. Once they are announced, once they have some track record, we do cover them technically also in our prime research team also. So that's what there are a couple of questions which I could see. One or two questions are there on the Q&A box. In which sectors FIs have short position? So FIs, they disclose their position on the index level and the stock level. Within the stocks, within the stock futures, officially it has not been disclosed that which individual sectors FI are short, but mainly FIs are short on the index future side. Now, I'll also like to add a little bit nuance here, that it is not that once they have a short position on an index, suppose one individual FI has a 100 crore position in the cash market on the long side. And in order to hedge that long position, the stock may not be in the stock futures or the derivatives. So they may short index futures in order to hedge it. That doesn't mean that they are ultimately short on the Indian market. Their short position on the index is just to cover their long-term investment in the cash market. So not all short positions are going to be covered when they have a bullish view. They may continue to keep short positions and they may increase the long position on the cash market side. But majority of the traders who are FIs traders who are in the index side, on the Bank Nifty side, there we see a lot of short position, and that may get covered if any of these three positives play out. Alright, it is almost 9:45, so we have consumed all the time which we had. Thank you all for joining. I hope this webinar has been useful. We will keep coming out with further insights and keep adding to our view on the market on Monday morning as well. As expected, we have gone through 4 weeks of downturn, 1 week of consolidation, and hopefully we will have positive view on the market on the next fortnight. I'll see you after a couple of weeks. Thank you, Nagaraj, for joining. Thank you, Siddharth.
Yeah, thanks.
That's all for this webinar. We can close it.